Hi, I am Anna. I come from www.ntvforex.com. U.S. existing home sales June preview. Old news on jobs and confidence. http ntvforex.com news ID 2E507F 7/20/2020 11:021 p.m. Housing purchases forecast to recover by almost 1 million annually. 30-year fixed-rate average mortgage at record low of 2.98%. Home sales reflect long-term employment prospects. Markets unlikely to be affected by the June U.S. housing numbers. Sales of existing homes, the largest category in the U.S. market, are expected to recover after plunging to their lowest level since the collapse of the housing bubble a decade ago. Purchases of previously occupied homes are forecast to jump 25.3% in June to a 4.86 million annual rate following May's 3.91 million, as the lowest montages rates in history have encouraged buyers despite 11.1% unemployment and the uncertain economy. Homes that have had at least one prior buyer are 90% of the U.S. market, and they dropped to 3.83 million in July 2010 in the aftermath of the financial crisis. Mortgage rates. Mortgage rates have declined sharply since the middle of March as the Federal Reserve has intervened in the Treasury market, buying bonds and mortgage-backed securities to force interest rates lower in response to the economic damage from the pandemic. The nationwide average for a 30-year fixed-rate mortgage, the most prevalent in the U.S. market, has fallen from 3.45% on February 6 to 2.98% on July 16. Before the pandemic, the all-time low had been 3.41% on July 7, 2016. Labor markets, consumption, and consumer confidence. The decline and partial recovery in the labor market, almost 17.5 million people were receiving their initial unemployment claims allotment in the latest week, has left the jobless rate at 11.1%, higher than the 10% peak of the financial crisis recession. Reuters. Though retail sales have rebounded smartly, soaring 18.2% in May and 7.5% in June after plummeting 8.2% in March and 14.7% in April, these sales reflect the return of deferred purchases as much as normal consumption. The rising numbers of coronavirus cases in several states have made a full economic recovery problematic, as a number of the largest states have rolled back or delayed reopening measures. Consumer confidence indexes reflect the uncertainty about the job markets and the economy overall. For July, the preliminary Michigan Consumer Sentiment Index dropped to 73.2 from 78.1 in June, missing the 79 prediction by a wide margin. The Conference Board Consumer Confidence Index is expected to slip to 96.3 in July from 98.1 in June when it is reported on July 28. Conclusion in the markets. For the majority of American homeowners, their largest and longest-lasting financial transaction, the ability to qualify for a mortgage and confidence to try, depend, more than anything else, on long-term employment prospects. That sanguine labor market of the 3 years prior to February, which saw the highest rate of home sales in 13 years, is gone, replaced by mass unemployment among those who would in most cases not be buying a home, and endemic worry among the employed who might. The housing market cannot return to normal until the first group is back at work and the second is secure in their jobs. Mortgage rates operate at the margin of the housing markets. Even record low costs cannot create confident demand. Markets have not historically treated the U.S. housing market as an indicator or trading event, and even if the downside risk to the June number is realized, it will be old news. The weakening dollar performance over the past few weeks has been the final retreat of the pandemic risk premium, aided in the case of the euro and sterling by prospects of a eurozone economic relief package. No result from the U.S. home market will change those views. Subscribe our channel to receive the news as soon as possible. Thank you for watching.